At 8:17 a.m. Eastern Time, the U.S. housing market froze. Not because of a crash. Not because of interest rates. But because of one sentence. This system is broken, and we are going to tear it down. Those words came straight from Donald Trump during an unscheduled press appearance that no one saw coming. Within minutes, headlines exploded, markets reacted, and homeowners across America started asking the same terrifying question. What just happened to my house? Wall Street analysts would later call it the most aggressive housing stance ever taken by a U.S. president. Social media called it something else. A declaration of war on the housing market. Trump didn't shout. He didn't rant. He spoke calmly, almost confidently, as he laid out what he claimed was a plan to restore fairness to American housing. But behind that calm tone was a bombshell. He accused banks of artificially inflating home prices, real estate investors of hoarding homes, and local governments of crippling middle-class buyers with regulation. According to Trump, the American dream had been hijacked. And then came the line that sent shockwaves through the market. If housing prices need to fall for families to win again, so be it. Within 30 minutes, mortgage stocks dipped. Homebuilder shares turned red. Real estate forums lit up with panic. First-time buyers were confused. Homeowners were nervous. Investors were suddenly very quiet. Because this wasn't just talk. Sources inside Washington confirmed that executive actions, tax changes, and new federal housing rules were already being drafted. Moves that could force prices down, squeeze landlords, and completely reshape who wins and who loses in real estate. And this was just the beginning. Because what Trump planned next would hit rent, mortgages, and home values all at once. By noon, the details began to leak. What Trump hinted at in the morning was far more aggressive behind closed doors, and for the first time, experts realized this wasn't just political theater. It was a coordinated strategy. According to senior advisors, Trump's housing plan rests on 3 shock policies, each one capable of rattling the market on its own. Together, they could rewrite American real estate. 1. Targeting institutional investors. The first move was aimed directly at Wall Street. Large investment firms, the same ones that bought up thousands of single-family homes after 2020, were suddenly in Trump's crosshairs. His team proposed new federal penalties and taxes on corporations owning large numbers of residential properties. The message was blunt: homes are for families, not hedge funds. If passed, the policy would force major investors to sell off properties fast, flooding certain markets with supply. Prices in investor-heavy cities could fall 10–20% almost overnight, according to early estimates. For first-time buyers, this sounded like hope. For investors, it sounded like an exit alarm. 2. Mortgage rate pressure on banks. Then came the banks. Trump's advisors floated a plan to pressure major lenders into offering lower mortgage rates for primary residences, while allowing higher rates for investors and second homes. In simple terms, live in the house, pay less. Rent it out, pay more. Banking analysts warned this could distort lending markets, but politically, it was explosive and popular. Within hours, lenders began quietly recalculating risk models, unsure whether to pause or rush new loans. 3. Federal override of local zoning. The most controversial idea came last. Trump proposed using federal leverage to override restrictive local zoning laws, forcing cities to allow denser housing construction in high-demand areas. Supporters called it a supply revolution. Opponents called it federal overreach. But one thing was clear. More supply meant one thing: price pressure downward. Homeowners watching this unfold felt something shift. Their homes weren't just places to live anymore. They were suddenly political assets. And the market knew it. By the end of the day, the housing sector hadn't crashed, but it was holding its breath. Because everyone understood one thing: if Trump followed through, the pain would come fast. By the second day, the mood had shifted. This was no longer just a policy debate, it was personal. Because while some Americans were panicking, others were quietly celebrating. The losers spoke first. Homeowners who bought at peak prices felt the ground move under their feet. In suburbs outside Phoenix, Austin, Tampa, and parts of California, people began running the numbers, and they didn't like what they saw. A 15% drop in home values wouldn't just hurt feelings. It would wipe out years of equity. For recent buyers, it meant being trapped, owing more than their home could sell for. For retirees planning to downsize, it meant delayed plans and shrinking nest eggs. Real estate agents were blunt behind the scenes. If this sticks, listings will surge, and panic selling could follow. Landlords felt the squeeze. Small landlords were next. Higher mortgage rates on investment properties combined with new taxes meant thinner margins, or none at all. Some started listing homes immediately, hoping to exit before regulations kicked in. Others raised rents, triggering backlash and calls for rent control. Ironically, the very group blamed for high prices was now under pressure from every side. And then, the winners. While fear dominated headlines, a different conversation was happening quietly, mostly among young adults. First-time buyers, renters locked out for years, families stuck watching prices run away from them. For them, Trump's message felt like validation. Finally, someone said it out loud. Online forums filled with posts like, "If prices fall, I can finally buy. I don't care if investors lose." This was the political gamble. Trump wasn't trying to protect everyone. He was choosing sides. And polls reflected it. Support surged among voters under 40, a group traditionally skeptical of him, while older homeowners showed growing unease. The market enters limbo. Developers paused projects. Buyers waited. Sellers hesitated. No one wanted to make the first move. Economists warned that uncertainty itself could trigger a slowdown, even before a single policy became law. And that's when a new question began spreading through Wall Street and Washington alike. Was this pressure intentional? Because slowing the market without officially crashing it could still force prices down, quietly, steadily, and politically. By the end of the week, something strange became impossible to ignore. Trump wasn't walking anything back. No clarifications, no softening of language, no reassurance to nervous homeowners. That silence told insiders everything. According to sources close to the campaign, this wasn't a misstep or a trial balloon. It was deliberate pressure, and the timing was the entire point. A controlled slowdown. Trump's advisors believed the housing market didn't need a crash, it needed a freeze. If buyers paused, sellers hesitated, and investors pulled back, prices would begin to soften naturally, without triggering a 2008-style collapse. One strategist put it bluntly, "You don't break the market. You let fear do the work." By attacking investors, banks, and zoning rules at the same time, Trump created maximum uncertainty, the one thing markets hate most. And it worked. Mortgage applications slowed, new listings increased slightly, price growth stalled in multiple metro areas. Not collapsing, just bending. Why now? The timing raised eyebrows. Spring, traditionally the hottest housing season, was approaching. A slowdown now would be felt immediately by voters struggling to buy. Lower prices by summer, lower rates by fall, a powerful message by election season. If successful, Trump could point to one of the most emotionally charged issues in America and say, "I fixed what they wouldn't." The political line in the sand. But this strategy came with risk. Homeowners vote, and they vote consistently. Alienating them could cost millions of supporters, especially in suburban swing states where housing values are practically a religion. Democrats seized on this instantly, accusing Trump of gambling with people's largest asset. Meanwhile, conservative economists warned privately that once confidence breaks, you can't control where it stops. A market holding its breath. By Friday, one phrase kept appearing in analyst notes. Policy-induced hesitation, not panic, not optimism, just waiting. And waiting can be dangerous. Because if even one major policy actually passes, the balance could tip fast. 2 weeks later, the housing market still hadn't collapsed. But it wasn't the same anymore. The frenzy was gone. The bidding wars faded. The fear of missing out, once the fuel of soaring prices, had quietly disappeared. And that alone changed everything. The first real move. Then came the confirmation everyone was waiting for. A draft executive order leaked to the press, targeting large institutional ownership of single-family homes. It wasn't law yet, but it didn't need to be. The signal was enough. Several major investment firms announced they were rebalancing their housing exposure. Translation: selling, slowly but steadily. Not dumping, not panicking, but exiting. In certain metro areas, inventory ticked up. Price cuts followed, small at first, 2%, then 4%, then more. Nothing headline grabbing, but very real. The reset begins. For the first time in years, buyers had leverage. Sellers offered concessions. Builders rolled out incentives. Mortgage brokers called people back. Homes didn't sell in a weekend anymore. They sat, they waited, and suddenly, affordability wasn't a joke. Economists stopped using the word crash. Instead, a new phrase emerged. The Great Housing Reset. WHO paid the price. Some lost badly. Flippers who overleveraged. Investors who bought late. Homeowners who assumed prices only went one direction. Their paper wealth shrank, and in some cases, vanished. But for millions who had been locked out, a door cracked open. The final verdict, whether history judges Trump as reckless or revolutionary, would take years. Supporters called it courage, finally challenging a system tilted toward capital over people. Critics called it dangerous, playing politics with the backbone of the middle class. But one thing was undeniable. For the first time in decades, the housing market wasn't untouchable. It could be pressured, it could be reshaped, it could be reset, and long after the headlines faded, one truth remained. The war Trump declared wasn't just on housing prices. It was on who gets to own the American dream. End.